The bad news is housing prices got this high. The good news is it looks like they have peaked where they are. All right, how's it going? My name is Christopher McGee. I'm the owner of Halcyon Real Estate, affiliated with the Keller Williams Market Center in Salt Lake City. Today is the 8th of July, and this is the numbers and the nuance. This is where you come every week in order to know exactly what's happening in Utah's real estate market. I just filmed 1 week late the sum up of our second quarter, and we'll just see a continuance of those trends into this last week, our first week of the third quarter here in 2024. So as always, I'll show you the numbers right off the MLS and how things are trending in the multivariate analysis that I bring to understanding the Utah housing market, and we'll dive into those after I give you the nuance of the market right now. Okay, so like I said, what we're looking at in this last week of data in Utah's housing market is really a continuance of what we saw throughout the second quarter, which is inventory or our supply of housing continued to climb. Demand remains stagnant, so couldn't take a big enough bite out of our level of supply to maintain our savagely unhealthy housing market, which for the last few years has consisted of very high demand coupled with very low supply, which put pressure on prices to go sky high, which is how we got where we are now, with that pressure for home prices remaining high because demand stayed high somehow throughout record high interest rates and record high home prices. So what we've been waiting for is these record high prices coupled with record high interest rates to be in effect long enough that demand had to dissipate. And we've seen that. We see that throughout April through June, demand just didn't rise like we would have expected it to seasonally in the second quarter of the year. It rose, but it rose barely. You'll see the chart this week that shows that demand has remained stagnant throughout the second quarter into the third quarter now. But demand has remained stagnant while inventory continues to climb. So that pressure for housing prices to climb has come off, which means housing prices have remained stagnant as well. The bad news is, like I said for last week's video, the bad news is housing prices got this high. The good news is it looks like they have peaked where they are. And my bet, as I said in the last video summarizing the second quarter, is that housing prices will remain stagnant throughout the summer and then will begin to fall in the fall, in autumn. Now I keep saying this, and don't hear me wrong, I'm not saying housing prices are going to plummet. That's not gonna happen. It's still Utah, there is still relatively high demand, and our inventory isn't so high that it's out of control in terms of supply with a way lower demand. So I do think housing prices will begin to fall this autumn, but don't expect a housing crash. Let's look at the numbers. All right, inventory came to 10,150, which is up from the previous week, so we still see this trending up. Our average days on market came to 53 days on market on average that it took for a house that was placed on the market to be on the market before it got an offer and went under contract. So that's up by just 1 day, still showing as a downtrend, but we haven't gone below 41 days on market on this graph at all. And our last 4 data points on this set are above the trend line, telling us the downward trend is certainly not accelerating. Average list price this prior week came to $663,954 and still trending absolutely nowhere, which is good. We don't want this traveling up anymore, where it's gonna be stagnant, like I said, and then eventually it will start to drop. And by eventually, I mean like no later than this fall. Okay, well, average sold price came to $661,823, which was up from the previous week. But what that tells us is that the difference between average list price and average sold price came to $2,131, still in the buyer's favor, which is up from the previous week and still trending up, as in closer to no difference between average list and average sold price. The number of homes sold last week came to 464, which is down sharply from the 718 we had the previous week, and that means this is trending nowhere. So demand really dissipated from what we would expect it to be throughout the second quarter into the third. The number of homes we have currently under contract in Utah comes to 5,100, nice round even number, which is down from the previous week and trending now the tiniest bit down. The number of price reductions last week came to 897 times last week that sellers decided they needed to drop their asking price in order to attract a buyer. Now that's down from the previous week, but this is clearly still trending up. The number of times last week that a listing contract was either canceled or expired or withdrawn from the MLS came to 272, which is down sharply from the week prior, and that's what we expect in the second week of any month. So that's down, and this set seems to be trending slightly up. And last but not least, our interest rates now sit at about 7.01%, which means they also are trending nowhere. And I don't anticipate them trending anywhere really until next year, and I think they'll start to come down. That's it this week, guys. If you've got any questions on anything that I said here, let me know. If you are looking to buy or sell a home or property in Utah anytime in the coming months or anytime this year, I hope you're comfortable reaching out to me. I'm gonna be more than happy to work with you. And as always, if you'd like to stay educated on Utah's housing market, there is no better way than to hit that subscribe and stay updated with me from week to week as I come here and give you the numbers and the trends right off the MLS. Thanks for watching, guys. Bye-bye, bye-bye.